Hey guys, how's it going? In today's video, I'm going to talk about the Aurora Cannabis $200 million debt that they took for BMO, from BMO. They can go up to $250 million. I'm fully expecting them to take the $250 million. I think Aurora wants as much money as they can get. This is an interesting thing because I thought they would use the value of their shares, but unfortunately, since the stock is not above $14, I don't think Aurora has the option to dilute their shares further for some money. So they're basically taking traditional debt, which is fine because when I was looking through the BMO debt, I noticed that it's only 4% per annum. Well, it's mid to high 4% annum. I'm not sure what mid to high means, but I'm thinking that it's around 4%. 4% is not bad because if you look at the convertible debt notes that Canopy took out, it was $500,000 at 4.25%. So Aurora is getting basically the same deal for $250 million, except for they have to pay back the cash and they can't just convert the debt into shares. I mean, it's okay. It's still a good deal. I think. I'm pretty sure. I mean, like, debt is not a bad thing, especially for business, because you can write it off on your corporation. You can write off the interest rates on your corporation, so it's not too bad. Because Aurora needs the money so they can build the Aurora Sun and the Aurora Nordic. So it's a Nordic. Yeah, I think it's Aurora Nordic. So they have 2 more facilities they need to build. So they need the cash from somewhere. So they're borrowing it because the price of the stock is they're not gonna get a chance to raise money because of the price of the stock, because the last raise was from BMO. Sorry, it was from $230 million, and they still haven't converted that. That's still under their debt. So combined, they have about $500,000 in liability or more. So I mean, it's not too bad, because it's not too bad in my opinion. It's not like it's gonna end anything. They need the money to continue to aggressively grow. Now I'm going to make my own comments on this video that just came out from BNN.
Cannabis has secured up to $250 million in a debt facility from Bank of Montreal. It's a landmark deal not just for Aurora, but for the cannabis industry as a whole. That's because until recently, marijuana firms had to rely on smaller independent lenders or share issuances for financing. It appears that has changed. Aurora Cannabis' CEO, Terry Booth, is with us now. Thanks for being with us.
Thanks for having me.
So let's start with the $200 million, what you plan to do with it. What does this change for your company?
Well, we plan to keep our pedal to the metal in executing our strategy on a global basis in the cannabis space, in the medical cannabis space, as well as prepare for the adult usage space in a proper manner.
So obviously getting production up and running full tilt is key as we head towards legalization. Are you ready to be at full capacity production to meet the market?
Our Aurora Sky project is only a couple of weeks off. We're going to be taking our first harvest down from Aurora Sky next week. We have an analyst and an investor day sometime in July, mid-July, and we'll be ready for adult usage. Certainly with the extra month, it helps, and our acquisitions and the integration of those acquisitions is going very well. So the extra month has given us some good space, and we look forward to entering the adult usage market in Canada.
There are some concerns, and I'm sure you've seen them, Terry, that in terms of how well prepared the retail market will be, that there will be oversupply for the legal retailers to sell, so a glut of product that will hurt your end prices. Are you worried about sort of how this all at least transitionally works out as we get retailing up and running?
Not at all. I think initially you'll see actually a lack of supply in the Canadian market, but this is a global company, and it's a global industry, and we look 5 years out before we see any glut in cannabis supply. The European market itself is demanding a lot more cannabis than we had anticipated.
See, more than they anticipated. So, well, they just signed a deal with 25,000 pharmacies, so they can sell everything they produce right now. So if like Aurora was in Canopy's position and all the facilities for Canopy were GMP certified, Aurora could have shipped probably like tons and tons of product over into Europe and make a lot of money without legalization. At least that's what I believe, and that's what he just mentioned in the video.
Germany has gone right through the roof with its demand, and now we're starting to see that move to Denmark and Italy, Poland and Malta. It's a great space to be in, and we don't anticipate a glut of supply at all.
There was this decision today to allow outdoor cultivation of plants, something that many in the industry had opposed. What's your feeling about that?
We've always supported indoor grow, outdoor grow, home grow. However you grow cannabis, do your very best to do it. And really that's what drove our mission in building these wonderful facilities that have high yield, have low risk, and have low cost, and have high...
I just want to add, Harvest One went up a little bit because Harvest One has a plan to grow outside. I'm really shocked. I thought the government wanted to really regulate the cannabis products, but by growing it outside, there's contamination risk for these plants. So I'm shocked that the government actually allowed this, but it happened and the government announced it. So, oh well.
High quality. The outdoor grow, whether it be hoop house or in the fields, is welcomed by Aurora, and we'll be on that as well for its derivatives, but you can't really get the quality for the medical industry or the adult usage that you can in the facilities like Aurora Sky, for instance.
What do you think is going to happen with all of the illegal retailing that goes on right now and the illegal market sales that happen? If they don't disappear, how complicated does that get for the legal producers?
I think it's a transitional period that we're going to see with the illegal dispense and the illegal grow, the gray market. Let's not call it illegal, but it's going to be slow in provinces like British Columbia, and rightfully so. Hopefully, they transition those pioneers into the legal space so that they can dispense appropriately, and the people that are growing it in the gray market, hopefully that they can also apply. There's a microprocessor part of the regulation we're anticipating, and we're working with some of the craft growers right now, as in Choom, the recent deal we've done in making the craft growers, the smaller growers, a big part of this big industry.
You have diversified beyond simply the production of marijuana for recreational medical use into other verticals in this space. Does that protect you against any kind of big disconnect in this market here, or even just a slow transition to a healthy legal market?
It certainly helps. Integration, vertical, whether it be horizontal, vertical, it's important. I feel, and our company feels, and we've had a great team integrating the various directions that we've taken in the company. We've stuck to our knitting. We know what we're doing, and I think that it helps. But we're not concerned about having a glut, and we're not doing it for that. We're not getting into other ends of the business because of the commoditization of cannabis. That's a ways out. So it's not why we've done what we've done. It's important to know each and every deal that we sign and that we look at in depth. A lot of them are accretive out of the gate, and that's just going to bode well for Aurora. And this BMO financing is a perfect example of Aurora's execution. Big banks don't lend big money unless you've done a great job in executing and building quality facilities or acquiring them.
It does.
That's so true. Banks are very protective of their money. Unless they see value in this company, they're not gonna just lend out big money to these companies.
Of course, add a layer of long-term risk to you in the sense that that big loan is secured by assets, including production facilities. Does that add a little pressure on you on the execution front to get this right?
No, I'm not worried about that. We've been executing since day one. We were, 19 months behind other competitors in the field, and we've caught them all up now, and we've passed many of them. It's important that the company continues to execute, and of course, the integration risk is there, but we've got a great integration team, Andre Jerome. We've got probably the best CFO in the business with Glenn Ibbott, and the entire management team. I'm very proud of this whole group, right from the C-suite people down to the people that are harvesting. It's an amazing company Aurora has built here, and it's not going to stop anytime soon, and that's globally. We have boots on the ground in countries across the world,
right.
And not just associations or affiliations, but employees.
You also have a stock that many considered valued to the stratosphere. You've made acquisitions that people considered highly valued. Some have compared this space to the dot-com companies that left investors quite burned. How do you reassure people that this is not a bubble waiting to pop?
Well, it's certainly not dot-com. Excuse me. I love that. I love when people ask me about the dot-com. The dot-com, and I was around for it with a little bit of gray temples. None of us had computers. The cannabis space has existed. The market has existed for over 50 years. We're just stepping into a space and pulling people over to our side of the fence. So I don't have any concerns whatsoever about a dot-com bubble. If you look at the production numbers that Aurora is going to put up, and others, the Sky facility, for example, 100,000 kilograms per year at full production. Present pricing, that's $800 million a year. We have 3 of those facilities going up now, and a partnership with TGOD, which makes it 4.
You also have to forget they have other stuff too, like oils and pills and creams. So, and then CBD products. So Aurora is just from the Sky facility is 800, but then they have like other businesses that will increase their revenue. So like 3 facilities at 800. No, he'll explain it, I guess.
The Green Organic Dutchman. Do the math on that. That's 3.2 billion, and a go forward in any pharma company would be a 10 times multiple. So I think we're undervalued.
Are there too many players in this space, though, Terry? Are there those that are overvalued?
I think you're going to see some carnage, but let's not get negative on this space. Everybody's welcome, and the people that execute will survive. Will it become 5 or 10 top growers with your craft, high quality, sort of boutique brand? Perhaps. It's been an interesting journey, and
yeah, I also been mentioning that there's gonna be some carnage. There's some companies are gonna start dying off. So just be careful when investing. Make sure you look at the balance sheet. That's the most important. Look at the liabilities. Yeah, and look at the total asset, and shareholder equity is important. It should never be negative. It should be a really high number. I guess that's all I really have to say about that.
And, I don't know that we're oversupplied early. I think everybody's got a great chance at doing this on the retail end of it. Alberta's made a great choice to go private. Looks like Ontario may go private retail as well. So there's opportunities there, but again, this is really a global industry.
Eventually.
It really is. And
eventually, but we're going to run out of time. I want to ask you about one other aspect to this story, and that is this notion that the big beer companies may be looking to partner with cannabis firms. Have you been talking to them? Is that a move that makes sense?
I can't speak to who we've been speaking to in the beer space, but it does make sense for them. Statistics in Colorado had them, reducing by, 20 to 25%. That beer, that is. The overall liquor industry down by a total of 15. So they're entering the space because they're smart. They've been around for 100 or so years, and it's interesting to see them knocking on the doors of licensed producers, as is pharma and as is tobacco. It's going to be a great few years, and who knows where it's all end up. Aurora is just going to continue to execute.
I think the alcohol business is scared right now. That's why That's why they want to get into the cannabis space, because people at the end of the day will only pick one of the two. They either, because it's too expensive to have both hobbies of smoking and drinking, so people either choose to smoke and not drink, or drink and not smoke, or some people will do both. But it's not, I don't think it's very good idea to mix both chemicals in your body, but I could be wrong. I don't know for sure. Now let's go to the balance sheet for Molson Coolers. Molson Coolers have a total of $30 million in total asset. They don't have very much. Is that million? So they have $418 million of cash. They have $30 billion of liability, but of assets. But if you notice the debt, right? Like almost $11 million. They took on like almost $10 million of debt, but then they use that debt to grow the assets. So at the end of the day, debt is good if you use it right. If you mess it up, then it could be a bad thing. But yeah, you can notice that they took out a lot of debt in order to massively grow the assets. So that's all I really have to say about that. That debt is not that big of a deal, and it's necessary if you want to grow your company aggressively. And this video has probably been way long enough. So thanks for watching. If you like this video, please give me a thumbs up. If you dislike this video, please give me a thumbs down. Subscribe for future updates, and have a great day. Bye.